Hey Irfan, what's going on?
What's up, Alex? How you doing?
So, what are we going to talk about today?
I think we talk about what we were working on yesterday.
Sounds good. So, yesterday we were helping a client with helping them prepare their documents to send to their partners and their CPA and their tax advisors. It's something that's not particularly fun sounding, but it's something that everyone has to do, right?
Yeah, very important. Not doing the tax prep, but doing the prep for the tax prep, right? So it's just what bookkeepers and accountants and I guess your controllers, your CFOs have to do. But again, we kind of look at the high level stuff. So we wanted to make sure that a full year of bookkeeping didn't have any errors to it, right? So there's a few things that we looked at, you helped out with, and we pretty much made it happen. So I guess first, what we look at is to make sure that everything is complete, right? So first, we want to make sure that we're sending all entities, all P&Ls for all entities, all balance sheets for all entities. I also like to send comparison for balance sheets so people see the capital expenditures, people meaning the CPA sees capital expenditures clearly, and just making sure that whole package is complete. So there's no additional requests by the CPA. The more back and forth, the more time spent. Then we like to go through each statement in detail, make sure that there's no errors. So for example, in your income statement, you have income expenses. On your income side, especially in real estate, you're going to have draws, you're going to have loans, you're going to have sales. We want to make sure that loans are not shown as revenue, right? Sales are netted based on cost expenses, or they're shown on the balance sheet so that the CPA can show a capital gain if it is truly a capital gain. So we want to make sure that we're not overstating income or even understating income, right? And causing a potential conflict during audit time. Also, depending on your accrual basis or tax basis, or I'm sorry, cash basis, you want to make sure that your unearned revenue and deferred income is properly stated. So an easy way to think about that if you're on accrual basis is that if you have deposits received in December, on a cash basis, that's true revenue. But on an accrual basis, that might not be recognized revenue until the next year. So you just want to make sure that is thought of during tax return prep as well. And then on the expense side, I think we see ask my accountant far too much, right? So that's usually the bucket that holds all. Accountant couldn't find the true category for the expense. We don't really want to see that, right? So what we can see in those ask my accountant categories or potential capitalized expenses, and we can see deposit, for example, that might end up being capitalized later. So you're pretty much overstating expenses there. And then just seeing any larger than usual expenses, we want to make sure that those expenses should not have been capitalized. So that's from your income statement standpoint. And then on your balance sheet, we want to make sure that the balance sheet properly shows the capitalized expenses and properly portrays that to the account, right? So a comparison report from prior period allows accountants to cleanly see added capital expenditure. So those are like the really big things we try to see. Your other things are gonna come up through your normal bookkeeping, like cash reconciliations, credit card reconciliations. They're going to make sure that your bookkeeping is complete, right? And having the right staff on board, following the proper procedures are going to make you comfortable that throughout the year that you are complete on the expenses and the revenue that you have. But just to sum it up, some other things that you might see and some potential red flags to avoid, or any negatives on your asset accounts, any positives, or sometimes they're shown negative depending on how it's displayed on your liability accounts. Journal entries that don't have any explanation, like adjusting journal entries that don't have any explanation, or even on that side, matched entries that don't have explanations. And then the other thing is that we often see personal expenses running through your business. You want to try to keep that as separate as possible too. So just overall, a good broad summary of how to prep for your tax prep, right? It sounds like a funny buzzword, but like that's what we are helping clients do to make sure that they're not overstating income, getting penalized by higher taxes when they really shouldn't.
Sounds complicated and time consuming to me.
Yeah, I mean, for the average person, it could definitely, but how many years experience do we have doing this, right? So for us, it's pretty much a walk in the park. We do it timely, we do it efficiently, and we get things to the tax CPAs as fast as possible. And tax CPAs love us. So that could even be a
You should get that
potential.
as a bumper sticker. Tax CPAs love us bumper sticker.
So
Coming soon on the shop website.
Awesome. I guess that's another revenue stream. But yeah, so even what we provide, I mean, it's often so clean and organized compared to previous years. You can even negotiate with your tax CPA about the fees because maybe you were not providing something so clean and organized before. So we might be even able to pay for ourselves there. So just overall, here to help. If anybody has a need, I know tax prep can be stressful for a lot of entrepreneurs, but I think we have it figured out. Our own personal businesses, we're spending 15 minutes for multiple entities at the end of the year. So we finally figured out a cost-effective solution. So we're available to help to others for sure.
I have a question. What are some downsides to not having this prepared correctly?
The biggest downside is overstating your revenue and being forced to pay additional taxes that you should not be paying at all. And again, the tax CPA's job is to utilize the information you provide them and put it in their tax software and then find the best results based on the information you provided them. Our job is to make sure that the information you provide them is correct. Okay, so that's a potential, and as well as overstating revenue and understating expenses, right? Not putting expenses properly, and then you have not capitalizing expenses, which could hurt you later on. So you could aggressively take expenses this year and then not have the expenses through depreciation for future years. And that's the more common across the board, right? Being overly aggressive.
Yeah. And I think some people, they take too many expenses or they claim too much income kind of by chance, and it doesn't really help with their planning for future years. So if you had more accurate information, then you can work with your CPA for maybe reduction strategies for that year if you're trying to reduce, or income increasing strategies for that year if you're trying to increase. But if you don't have control over what you actually have, then it's going to be harder to plan for future years because the future years build on the current year and your past years.
Absolutely. Yeah. Having the information available allows you to make decisions needed to make it happen. So, but yeah, we definitely help with that, and you can reach out, website, email, and whatnot.
And we'll give you a free bumper sticker.
What was it again, Alex?
Tax CPAs love us.
Tax CPAs love us.
There you go. All right. We'll end it with there.
All right. Until next time, guys. See you.
All right.